Good morning, everyone. Welcome to Coffee with Carlson. Today, I didn't really make it to breakfast with my producer, Dan, so Dan's not here, thus me sitting behind the computer all by myself. I can see his truck over there, though, and I'm sure he just got a notification that says that I'm doing this. So, Dan, I apologize for missing breakfast this morning. But I did have a nice workout with my beautiful wife and a nice run where we pretty much ran right by Dee's while just before you got there to have your wonderful, nutritious breakfast that I missed. But I am enjoying a wonderful hot cup of strangely warmed coffee. If you would like one, let us know. You can get it at Strangely Warmed Coffee. You can pick some up at Legacy Bicycles right over there. Wait. The camera looks like it's the opposite direction it actually is. It's over there on South Ridgewood Drive. Anyway, let's get the show started. Thank you very much for joining me this morning. Sorry that I'm late. My name is Jeff Carlson. Today is October the 19th. Wow, I cannot even believe it. For those of you that practice accounting like me, I can't believe that we just got through the longest tax season, it seems like, since I've been doing this. And it was a crazy year with COVID and lockdowns and people not moving south or heading north. Everything was just crazy this year. That's the best way I can put it. But it's all over for the most part now. Maybe there's a few things that pop up later on, but we're starting to get geared up for next tax season. In getting ready for that, I've been talking a little bit about some advice for small businesses and things you're doing, and really trying to keep it focused on things that are coming up within my work week with clients, new clients, old clients, as we talk about issues that are relevant to them. Last week, we talked a little bit about meals and entertainment expenses and some of the changes related to those. Today, I wanted to spend a few minutes, and I told you we're gonna keep these 10 or 15 minutes. If you have topics that you think would be great, or if you have a question, you're a small business owner and you want me to cover a topic, put a comment down below, and we'll certainly check it out. Also, don't forget to check us out on YouTube, like, subscribe, hit the little bell, and I'll put that link down in the description as well. I've been doing that every week. Please check it out. We only get a few views over there, but we'd love to see you there. Okay, so vehicle expenses. I'm going to start off with a few of the common myths. The first one I think that a lot of people think is true and actually go about taking the steps to do this and then learn that it's not true after the fact when they come meet with me. Is that if you put a sign or a logo, today wraps are very popular, kind of expensive, but it gives you a lot of brand awareness, marketing prowess out there. If you do that, your truck automatically becomes 100% deductible, or a car, whatever it is, becomes deductible, and you don't need to do anything else. I think that's probably the most common myth that I see when people come to me. Well, I put a sign on the side of it, it's got to be deductible. The next one is, it's kind of crazy sitting here the way I am right now because I'm staring at the camera over there, and it's got a screen on it that's showing me live what's going on with the camera. And then in front of me here is a computer monitor, and the computer monitor is showing the streaming software that I use to record this and the Facebook live stream. And they look like they're a little slower. Anyway, let me get back to the topic at hand. So if you put a sign on your car, automatically makes it deductible. In reality, that is not true. Not true at all. The cost of the sign or the wrap, certainly deductible for your business, but different than the vehicle deductions. And the second one that I see a lot is commuting miles. People will give me their mileage record and show me that they spent 15,000 miles drove 15,000 miles on their car last year, and I'll ask them for a breakdown of personal miles and business miles. And they'll say, no, it's 100% business. I'm like, well, how is that? And they explain, well, I drive to work every day. I just lost Facebook, it looks like. Connecting, reconnecting. We'll put a recorded version of this up. I might have to click something over on Facebook to get it rolling. So you have to keep track of business and personal miles. They said, well, I use my car solely for business. Okay, but how do you get to work? So if you are at your house, you have to drive to wherever it is that you work, and that portion of the mile is called commuting miles, and that is not deductible. And it doesn't really matter how far you drive to work. If I live in Sebring and I have a job in Tampa or Orlando and I go there every day for work, I don't get to deduct those miles just because it's such a long drive. That has nothing to do with it. It depends on what you're doing during the time that you're driving. So in that scenario, and I'll use myself as an example, I live about a mile away from my office. So my drive from the house to the office is never deductible, called commuting miles. My mileage from here, anywhere else I go for a business purpose, if I go to the bank, if I go to visit clients, if I go to the post office, if I go to the office supply store, then I'm having a lot of problems, it looks like, with the live stream this morning. I'm not really sure. So I keep telling it to go. Oh, I'm not even live. All right, interesting tidbit, everyone. I have been sitting here recording and talking to you for a while. It looks like something's going on with the live feed. This is what happens when your producer doesn't, well, Dan did not show up, so you might not have heard this if you're on Facebook. And no one's letting me know whether or not it's working. Good morning. Welcome to Coffee with Carlson. I think this is the first time that you've seen me. I've been sitting here talking for approximately 10 minutes about the topic today, and I just discovered that I did something wrong on the computer. So hopefully if anyone's watching it, you'll let me know now that you can see me. Maybe Dan is. My name is Jeff Carlson. Today is October the 19th. I'm running a little late today because I got up this morning, new schedule this week. Jessica, my beautiful wife, and I are working out at 6 a.m. every morning. That lasts about an hour. So when we got back to the house and I grabbed some water and I was sitting at my desk checking some email, and I get a text from Dan with a picture of the empty table at Dee's restaurant because, unfortunately, I totally forgot that I was supposed to be there because I was having so much fun on my run, even though the run ran right by Dee's pretty much. So sorry for that, Dan. My sincere apologies. I can see your truck over there, so I know that you're probably get my notification now and you're watching the video feed. And please accept my apologies. And I'm sorry that you didn't show up. I'm enjoying a nice, wonderful cup of my strangely warm coffee this morning that I made. But without a producer, I'm sitting here with headphones and a computer in front of me. And I was saying a few minutes ago to myself, since I wasn't online, but I was recording it, maybe I'll show that to you later, that I've got multiple screens that I'm looking at right now. The camera's out here, and I've got a screen on it. I've got a computer screen right here with two different screens, one showing the Facebook Live feed and one showing the streaming software that I use. So it gets a little confusing to keep track of. That's why I wasn't going live. So here we go. Topic for today. I've been talking a little bit about, I've tried to focus on accounting and tax. I've tried to focus on topics that come up during the week with my customers. And this one came up multiple times last week. So I thought I would spend a few minutes talking about vehicle deductions and how and why, how you're allowed to do that, how it works. I'm not going to go into great depth as I don't usually do that because your specific situation is obviously just for you. Talk with your tax preparer, give us a holler. You can set up an appointment right from our webpage. You can send me an email. Check us out at carlsonaccounting.com. So today, again, vehicle mileage deduction. So a couple of the myths, and I was researching this just to see what other people said on the web about myths of vehicle deductions. But really, they're ones that come up with me just last week. The first one is, I think, a pretty widely accepted truth that a lot of people believe and tell their friends to believe, is that if I put a sign or a wrap on my car, the car immediately becomes deductible. This is pretty common thought for, we've used realtors as examples in the past, but it's also common practice for electricians, plumbers, other people that put a vinyl sign on the side of their car, and that would make that vehicle then deductible. And that's not true. Even if in today's world, a lot of those same people you'll see around town put wraps around the entire car, color signs, lots of information on it. It's pretty cool, but it doesn't make your vehicle deductible. What it does do is you do get the deduction for the cost of the sign or the wrap, but you don't get to deduct the car automatically just because you put the sign or the wrap on it. And it's a very important distinction because you still have to go through several steps in order for the Internal Revenue Service to approve that, if you ever get audited, to allow you to keep that deduction. I'm just going to type good morning to everyone out on the web. Dan normally does that for me because I'm too busy focusing. Today I'm partially focused, which is sometimes tough for me. So vehicle wraps, that's a big first myth. The second one is that a lot of people come in and they hand me their mileage log for the previous year, and it says maybe 15,000 miles that they put on their car for the year. And I ask them, you have to split out business and personal miles, and they say, no, it was all for work. And so as you ask more questions, and we're not trying to pry, we're just trying to make sure that the deduction that you take is, one, accurate, and also, good morning, Celeste, that your deduction is accurate, that you're allowed to take it, and that it's accounted for properly on your tax return. So it's disconcerting to sit here watching the viewers go up and down. Everybody share, make more people watch. The next one is you give this 15,000 miles. You have to split business and personal. And when they say it's all business, I ask another question. The next question is, what do you do with your car for work? Well, they leave their house, they drive to work, and they work, and then they go home. So that's called commuting miles, and those are never deductible. Commuting miles, never deductible. Driving from your home to your regular place of work or to your first temporary place of work. So even if you live in Sebring and you work 2 hours away in Orlando or Tampa on a regular basis, like every day or 3 days a week or something like that, you don't get to deduct the miles related to driving from home to work. That's a pretty big one. Lots of people think that that's allowed, and it's not. We'll get into another rule about how employees handle that versus people who are self-employed in a few minutes. Now, I want to distinguish I'm going to use myself as an example. I have clients in Tampa, Winter Haven, Lakeland, all over the place, Texas, a lot of different places around the country. So if I drive to Tampa to see a client for the day, what I try and do is I try and bunch up multiple clients in one day to make it a little bit more efficient for me, not having to go back and forth a lot, because I would always rather not spend $1 in order to deduct $1 if it's possible to do that. And the same goes for miles. So if you can accumulate multiple meetings in one spot and travel there, then you want to do that in one shot. But if I go from home to the office, I leave the office, I drive over to Tampa to see clients for the day, that mileage is deductible, and I'll get to claim that. Now that I've talked a little bit about what is and what isn't deductible, I want to talk about a pretty big change that occurred a couple years ago with the new Tax Act, and that is that employee business deductions are no longer allowed on Schedule A of your personal tax return. So if you're a W-2 employee that works regularly, and even if you work for me, this wouldn't be the case, but if you drove from your home to the office and I said, you've got to go to Tampa, spend the rest of the day over there with one of our customers, taking a look at what's going on, can you do that? They would take off and drive over there. If you don't get reimbursed by your employer for that, you don't get to deduct that mileage anywhere, so you just have to eat it now. And that used to be a pretty big deduction, especially for traveling salesmen. I have traveling salesmen that sell medical supplies, and they would rack up 20, 30,000 miles a year on their car. So it was a pretty big number. You figure on average it's about 50 cents a mile over the years. So that was a pretty big deduction before, but you don't really get that at this time. So what you really want to do, if you're an employee and you're working for someone and you're traveling, you need to make sure you negotiate a business mile reimbursement plan so that they give you the standard mileage rate, close to the standard mileage rate, at the standard mileage rate that the IRS publishes if you can, or at least something so that you're not losing all of it. And it looks like I lost my internet connection again. Maybe we're back on. I'm getting messages from everywhere, so I'm not really sure. And right now I'm not connected, so I'm not sure if you can hear anything right now. Says 20 seconds. We'll see. Well, it looks like I lost that video feed. My apologies. I'll delete that, and I can't even reload Facebook right now, so we'll just keep recording. So what I was saying is that you want to try and get yourself a reimbursement plan from your employer. That would be a tax-free reimbursement if you provide them with the mileage that you spent on business, and they really should do that. They're not required to do it, but they really should. It's the right thing to do, especially if they require you to use your personal vehicle to drive for their business purposes. So try and negotiate that into any contract that you have so that you're not losing out, since you're not allowed to take that deduction for yourself anymore. The next thing that's very important, and I think this is the most important item that you have to keep track of, that you have to do in order to secure that deduction and make sure that if you're ever questioned by the Internal Revenue Service, we have the tools to justify that to them. And that's keeping a detailed mileage log. And this is one of the most difficult things to do for people, to keep a log of the date, where they went, the purpose, and what the beginning miles was when they left their office or place of work, and what the ending miles was when they returned from their place of work. I know it sounds a little tedious. There are apps out there that will keep track of that. I know I have a few clients that are losing them. This is really important for someone like a realtor that's on the road all the time. You're pretty much on the road all day, every day, and you want to keep those miles very detailed records so that if the Internal Revenue Service ever asks for it, you can produce it and you can justify it. Some people put it on their calendars. So if you have a paper calendar that you keep in your car that has your appointments on it, sometimes they'll write the beginning and ending mileage next to those appointments. And that's okay too, as long as you can total them up at the end of the year and give them to your tax preparer, then you're going to be covered, I think, for that deduction. And you don't really have the issue with, So you want to make sure that you keep a detailed mileage log, that if you can, you're an employee, you try to get reimbursed from your employer, and if you can't do that, then you don't really get a deduction for it anymore. So I personally would try and limit my travel on behalf of the employer if they're not going to help me out by reimbursing me for it. The next thing is that the standard mileage rate, I think, is the easiest way versus actual miles. And let's talk about that for a second. Some people want, you either get the standard mileage rate or you get So you're either going to take the standard mileage rate or actual expenses. You have to keep a mileage log in either scenario. And the reason you have to keep the mileage log is because you have to take those total expenses or total miles and divide them based on personal versus business use. And in order to do that, you have to use the mileage log to keep accurate records. So for instance, if you drove a total of 10,000 miles for the year, 77,000 of them were business and 3,000 of them were personal, then you would total up all your qualified business expenses for the car, including the cost of the car for that year, and you would multiply that times 0.7 to come up with a deduction. So you have to keep the mileage log in order to have an accurate calculation for that. So generally what I tell everyone, if I'm doing the mileage log anyway, then let's just keep track of the miles and not worry about saving all of the gas receipts and repair receipts and things of that nature. So you don't really want to worry about that. Then just keep the mileage log. There are apps you can use to keep it now, and that makes it safe. Now, for 2020, the standard mileage rate is 57.5 cents. So remember that as you're keeping track of these miles. While it's gone up over the years, so it goes up every year generally, depending on I guess they look at a basket of vehicle expenses, so it does go up every year. So 57.5 cents for 2020. Keep track of your miles, and you'll get to deduct those. And the standard mileage rate is a little bit easier than keeping track of your actual expenses. And again, you're required to have them both anyway. If you deduct the cost of your vehicle, you also have to remember that there are luxury automobile limitations. So you can't just deduct, and this is generally true. There are lots of variables, size of the car, weight limits, things like that. But in general, you're limited to deducting the cost of the car, and you have to make sure that it falls under those limits if you're using actual expenses. So again, I generally recommend utilizing the standard mileage rate so that you don't get into those actual expenses, keeping track of luxury automobile limitations, and you don't need to really worry about that with the standard mileage rate. Now, let's talk about something a little bit different, and I'll end here. The last thing is, this doesn't really apply to vehicles that are actually 100% business use. And generally a vehicle that's 100% business use is something like a work van or a work truck that has boxes on the back, or if it's a van that you utilize to, I'm thinking of electricians, plumbers, carpet installers. These guys have vehicles that are really set up, carpenters, they have vehicles that are really set up specifically for the job that they do, and they're not going to really use it to go to the grocery store because it's full of tools and materials and other things, so it's not really practical for that. And a lot of times, those vehicles will stay at the employer's house unless you're on call. Maybe you're the on-call person that night, so you would drive the car home. But generally, those vehicles are going to be provided by the employer. They're going to be actually 100% business use. They're going to have signs and tools and other things in them, and these rules don't necessarily apply. Now, they do if you're starting to use that vehicle for personal use. There are some rules related to that as well, but that's really between you and the employer and the accountant for the employer to determine what the rules are and how they apply to you in that particular scenario. So I hope that helped. I hope that didn't confuse too much. Just a very, very brief explanation of how vehicle expense deductions work, a couple of the myths at the beginning of the show, and my commentary. I want to thank you very much for joining me this morning on Coffee with Carlson. Sorry for the technical glitches. I'll go downstairs and try and edit this video real quick so it can come back online in a full version. Sorry again, Mr. Andrews, for missing breakfast this morning. Thank you for missing the studio time, and I will see you next time on Coffee with Carlson. Thank you very much, and have a fantastic day.